Now we can start with a new section, and this section is about section 8. Section 8 talks about composite and mixed supply. And the question arises is, sir, what is the requirement of this composite and mixed supply where we are discussing this section? The reason is very simple. Let's take a very simple example which is on your screen as well. Hotel is giving you a free complimentary breakfast, and they are charging you 300,000 rupees per night. Okay, so hotel with including breakfast, they are charging 3,000 rupees per night, and hotel services is leavable for 18% GST, and restaurant service is leavable for 5% GST. Now everybody knows that in 3,000, breakfast money is also included. They are not only charging from us room rent, they are also charging for breakfast. But the question is, there is no segregation because the price I am paying is combined. I am not separately paying for breakfast. I am just paying for the hotel, and I am getting the complimentary breakfast. So from here the question arises is that how can I charge GST? When I will prepare the bill, how will I calculate GST in such kind of case? This is an example of composite and mixed supply. You can find out a lot of different scenario in which you are paying for combined supply, in which there is some goods, there is some services, different rate of goods and different rate of services. So in all these cases, what will happen? So we can divide all the supply into two parts when there are two or more different supply included. First one is called composite. Now first one is composite, means two or more supply, they are in conjunction with each other, they are naturally bundled, and one of them is a principal supply. So composite supply says that if you are giving two combined supply, you are supplying goods and services, and if they are naturally bundled, if they are bundled together, now what to do? Very simple. First of all, find out, is there any principal supply? If yes, then yeah, it's a composite supply. Now what to do? Interesting thing is, if two or more supply are in conjunction, but they are not naturally bundled, means they are not ordinarily supplied together, one of them is not a principal supply, then we can say it is a mixed supply. So we can categorize our supply into two parts, whether the supply is composite or whether the supply is mixed. Again, I am saying it depends whether the supply are naturally bundled, whether they are supplied together in ordinary course of business, or whether they are supplied, they are not supplied naturally in the business, they are not ordinarily supplied together in the business. That will decide the criteria whether it will be a composite supply or it will be a mixed supply. Okay. Now tell me, I need an answer from all of you guys. What will happen in case of composite supply and what will happen in case of mixed supply? Tell me what will happen in case of composite supply. What rate I will choose if my supply is composite? What will happen? Okay, very nice, very nice. In case of composite supply, the whole supply will be the principal supply only. So if we are taking the example of hotel, like there is a complimentary breakfast with hotel. So what rate will be applied is the on complete supply. On the whole supply, the rate of hotel will be applicable because nobody is going in hotel for breakfast. Nobody will say you that I want to have breakfast in the morning, therefore I was checking in the hotel. Of course, everybody is in the hotel because they want to go for accommodation services. So the important thing is, what is the principal element here? The principal element is hotel. So the complete supply will be treated as accommodation supply, hotel supply. But what about the mixed supply? Now whole supply will be treated as principal supply. So the complete supply will be treated as principal supply, means the rate of principal supply will be applicable. But in case of mixed supply, now what is mixed supply? When they are not naturally bundled, when they are not ordinarily together. Like I just create a combo of chips with biscuit. I just create a combo of shampoo and face wash. Now they are not ordinarily expected to be supplied together. The customer doesn't expect that when he will be buying shampoo, he will get face wash. No. So this kind of combo will create a mixed supply. And in case of mixed supply, always the highest rate of GST is applicable. This is very important. In case of mixed supply, always highest rate of GST is applicable. So first, for deciding what rate will be applicable, we have to decide whether the two or more supply which are supplied together are ordinarily naturally bundled. If yes, then what is the principal supply? That supply will be the supply, that supply will be treated as a supply for the whole combined supply. But if they are not naturally bundled, then of course it will be treated as mixed supply and the highest rate of GST will be applicable. Okay, let's take an example to understand this. This is not more an example, this is more like a circular or a clarification given from the different sources. First, this is very interesting. I am giving a services of printing. Like we are going for a photocopy shop, just assume a person is printing books. Now on printing books, what I will do is, like I want to print something. What I will do is, I will give my PDF file in a pen drive or maybe through any email. That printing guy will download the file and he will print and will spiral it or will basically spiral that folder and give us as like a book. Okay, he will bind that book and will give us to us. Now the point is, when he is printing our content, he is basically giving two types of supply. First, he is supplying us paper, because when we are going for printing, they will not ask us to bring the paper. They will give the paper as well as they are providing the printing services. And for that, they will be charging that much amount per book. Okay, so this is the scenario. Like if I am going for printing of books, I will be getting the paper as well as I am getting the printing services. Question arises is, now in this case, there are two different rates of GST. What rate will be applicable in case of printing of books? What do you think? What should be the rate applicable in case of printing services? It should be paper or printing? It should be printing. Why? Why printing? Why it is printing and not paper? Actually, which is principle? Which is more important? If I am going for printing something, the more important is the printed content, not the quality of the paper. So of course, which is more important or giving the essential character of the commodity, the main important thing which is giving the essential character is the printing. And that's why in this case, the rate of GST of printing services will be applicable. Very nice. So when we are going for the composite supply, the MCQ, in MCQ questions, they might ask you what is the rate of GST applicable. So we have to remember that what is principle in this case. So it is a composite supply. Of course, it is a composite supply. It is a composite supply because this is naturally bundled. Normally, it happened in ordinary course of business. Customer expect that when he is going for printing, the printing guy will of course supply the paper as well. So this is a naturally bundled supply and it's a composite supply. If it is a composite supply, we have to go for the principal supply. Principal supply is printing. Very nice. So it's a printing supply and 18% rate of GST will be applicable. Now I have one more doubt. Sometimes if you are going to a restaurant, you will look at the tissue paper. On tissue paper, the name of the hotel is also printed. Yes? Have you seen any tissue paper in the hotel where the hotel, that restaurant is not only, they are giving us the printed tissue papers. Yes? Now a company manufactured a tissue paper and printed our name on it as per the convenience. Means when we are ordering the tissue paper, they will ask us that do you want printed name on that tissue paper as well. So the company is supplying us the paper as well as they are printing the hotel name on that tissue paper. Now my question arises. They are supplying us tissue paper and they are also printing the hotel name. Tell me what should be the supply, whether it is supply of paper or supply of printing. Now it is paper. Now it is paper. You know why? Because again, now tissue paper is giving the essential character, not the printing. That paper that we are buying for our restaurant, is the main purpose is not the printed content. the person who is grabbing the paper, the purpose is to use that paper, not that printed content. So what is giving the essential character here? The printing is not giving the essential character. That paper is the essential character. So of course, in that case, what is the principal supply? Paper is the principal supply. So we have to find out the principal. So here the principal is tissue paper. That paper is the principal, not the hotel name. So there are two different scenarios. If I am going for the content, like I am printing book, I am printing annual reports, magazines, then in that case printing is important. But I am going for printing of tissue paper, envelopes, then tissue paper and envelope is the important thing, not the printing. So that will be the principal supply. There is one more interesting case. Yes. Of course, it's a composite supply. We are deciding the principal only because if it's a composite supply. If it was a case of mixed supply, na, ordinary course of business, we have to go for ordinary course of business. Like if they are doing this kind of activity in a ordinary course of business, then we can say it is naturally bundled. Naturally bundled doesn't mean that it cannot be supplied without printing. No. Naturally bundled means customer expect that this kind of service will be bundled with the product. So normally this happened in the ordinary course of business, and that's why it's a composite supply. Like I am talking about the classes. You have paid any fees for the classes. Now you are also getting the notes. So now they are naturally bundled. You cannot say that a person can teach without the notes as well. No. What a normal student expect, what is happening in the ordinary course of business, generally who is taking the classes, they are also supplying the notes. So now they are naturally bundled. So naturally bundled means what is happening in ordinary course of business, what customer expect when he is buying in the market. So customer expect that if he is buying a tissue paper, maybe he get the printed name as well. So it's a ordinary course of business, and that's why it's a composite supply. It will be principally bundled. Composite supply, principal is paper. There is one more interesting case. There are two types of case. First one is UPS with inbuilt batteries, and second one is UPS with outside batteries. Now the company is also selling the UPS in which the battery is inbuilt. Like when we are buying a computer UPS, our home PC, they have inbuilt battery. There is no battery attached to it. But when we are looking at the inverter, that inverter with which we are using at our home for power cut, that has an external battery attached. Have you seen both kind of inverters? First one is like PC, UPS which we are using, which is attached to a PC. Another one is an home inverter where battery is separately attached. So there is a clarification regarding this case is, like there was a case, and case was Switching Auto Electro Power Limited. This case says that if the UPS is in inbuilt battery, then of course the principal is UPS and the rate of UPS will be applicable. But if inverter is supplied with external battery, like you are buying an inverter and you are also getting an Exide or Amar Raza or Amaron or any other battery, then UPS with external battery are two different supply because they are not naturally bundled. Because customer doesn't expect that if he is buying a inverter, then he will automatically get the battery. And battery can be separately sold. Battery is having multiple uses. So we cannot expect that if a person is buying a battery, he is using only and only for inverter. So there are two different supply here, and it will not be principal naturally bundled, and therefore it will be treated as mixed supply. So this is a special case. Case is regarding Switching Auto Electro Power Limited, and there are two different scenarios here. UPS having inbuilt battery is a complete UPS. It will be principal supply is UPS, composite supply. But UPS with external battery is not naturally bundled, and therefore they will be treated as mixed supply, not as a composite supply. This is one more interesting case. Clarification regarding unstitched salwar suits. There is one more clarification by board, that is regarding unstitched salwar suits. What is happening is rate of GST on clothing material is 5%, and rate of GST on shirts, t-shirt that we are wearing is 12%. Ready-made clothes rate of GST is 12%. Unstitched cloth material rate of GST is 5%. Now what is happening is, what company is doing is they are cutting the salwar suits, and they are just cutting the designs. Means it's a cloth material, but it is the company has already done all the cuttings. Means the work left is only stitching. So now the question arises is whether these unstitched designer already cutted salwar suits will be a cloth material or a ready-made wear. Cloth material, ready-made wear, that is a question. And the answer is very simple. Cutting anything into different pieces will not change the character of the product. If I have a cloth and I am cutting it into two parts, that will not change the characteristic of the commodity. The commodity will be cloth only, it will be ready-made wear only if it will become some kind of shirt, some kind of t-shirt, some kind of ready-made salwar suit. It is wearable. Until it is wearable, it is cloth only. And that's why merely cutting the salwar suits according to the design will not change its character, and that's why it will be treated as cloth material only. Is it clear to everyone? Very nice. Now, in our MCQ PDF, we have 5 questions that is related to the topic that we have discussed in our supply chapter 27, 28, 29, 30 and 31. So what we can do is we can look at some MCQs from our MCQ PDF, and that is from 20. Yes, this is the PDF, and from 27 to 31. 27 to 31 MCQs we have some that we can solve right now. 27. Yeah, this is a very interesting question. Look at the question. A company supply an air conditioner registered under GST. He gifted air conditioner to its employees. Okay, so company gifted air conditioner to its employees. Okay, it's not clear. I will increase the size of the screen. Okay, just wait for it. I will increase the size of the screen. Might be now it will be clear. It is clear. Look at the screen now. Company is actually gifting air conditioner to its employees. So how much value of air conditioner they have gifted? Listen, company gifted his employees 150 air conditioner. 150 air conditioner. Manoj, please switch off the camera. Okay, thank you. So basically, a company is gifting 150 air conditioner, and they have installed that air conditioner at the residence of the employees. What is the value of the air conditioner? 52,50,000. The overall value of total air conditioner is 52,50,000. Compute the GST liability. How much tax company has to pay? Okay, there are 4 options. Tell me what is the correct answer. The answer given here is, I will try to hide the answer. Maybe you will get the answer. But yeah, it's actually C. You know why? Because they have gifted 150 ACs to their employees. So what is the value of the gift per employee? We can divide that 52,50,000 divided by 150 employees. So around 30,000 K, 35K. So the value is not exceeding 50,000 per year. And if the value of the gift is not exceeding 50,000 per year, whether GST is leviable, whether it will be supply or not, it will not be supply. So yeah, if the value of gift is not more than 50,000, it is not a supply. So it is not a supply. Next question. It is regarding composite and mixed supply. A company is selling refrigerator, stabilizer for refrigerator, LED television, split air conditioner and stabilizer for air conditioner. Total value is 115. Important. Jolly Electronics has given a single invoice indicating the price of each item separately. Okay, indicating the price of each item separately. And Mr. Rakesh has given a single check for all the composite discounted price. State the type of supply and tax rate applicable on it. It is a common supply or it's a composite supply. Actually, answer given is here is wrong. I can tell you this is a wrong answer. I will correct it. The correct answer should be D. Correct answer should be D. You know why? Because if I am disclosing the value of each item separately, how can it be a composite supply? it will be composite supply only if it is in conjunction with each other. Value is not separately indicated. If value of all the other services are separately indicated, then how can it be a composite supply? So it's not a composite supply, and therefore the correct answer is D. It's not a composite and mixed supply. Tax rate, respective tax rate will be applicable here. Yes, so this is question number 28. Question 29, give me the answer. Which of the following does not qualify as supply under GST law? Does not qualify. Disposal of car without consideration and the supplier has not claimed ITC. Of course, first one is the not supply. You know why? Because it is supply without consideration, and in schedule 1 we have clearly discussed that it is supply without consideration, and disposal of capital goods without consideration is taxable only when the ITC is claimed. The purpose is to reverse the ITC only. So if on capital goods we have not claimed any ITC, then there is no question that you are required to pay the tax when you are disposing of the car. If you are supplying it with consideration, then it will be under 71A, but it is without consideration. So schedule 1 clearly specifies that if I am disposing of the capital goods, then it will be supply if ITC has been claimed. No ITC has been claimed, no consideration has been charged, then how can government charge GST on such case? So the correct answer is A. Next, Paliwal Associates is a firm of chartered accountant and he is registered under GST, Jaipur. They have taken, listen carefully now, this is very interesting. Option B explained a principal makes supplies to agent who is also registered. Principal to agent, that is a supply. We are discussing what is not a supply. Principal to agent is a supply. Head office supplying goods to its branches outside the state is a supply. And person importing without consideration for business from his relative is also a supply. So B, C, D, all three are supplied. Only A is not the supply. Okay, next. There is a firm of chartered accountant and they are located in Jaipur. What they did, listen. It has taken consultancy services for its Jaipur business for another establishment located in UK. So basically it's an import of service from relative and no consideration was charged for the same. No consideration was charged from the same. So consultancy services received by the Jaipur business, consultancy services received by the Jaipur business from relative where it will attract GST under which section, section 7, 71A, 71B, schedule 1, schedule 2, schedule 3, where GST will be applicable in this schedule 1. Yes. Fourth case, import of service from relative without consideration for business in India. Now question arises is on this amount whether IGST will be leviable or CGST, SGST will be leviable. Another question. IGST. You know why IGST? Because it's import. On import we always have to pay only IGST. So the correct answer is A, IGST. Next, there is one more question. Which of the following is not a supply under GST? Goods supplied free of cost by X and Son to its agent. Goods supplied free of cost by X and Son, a company, to its agent. So it's principal to agent. It is supply. It is covered. It is not the answer. We need what is not supply. Importation of accounting services from father residing in US. That is also because import of services from relative without consideration for business. That is also a supply. An expensive watch gifted to an employee for rupees 50,000. Gift to employees up to rupees 50,000 is not a supply. So the correct answer is C. Gift to employees up to rupees 50,000 is not a supply. So what is the correct answer? The correct answer is C. Got it? So these are the questions. These are the variety of questions that can be asked in the exam regarding supply. They can ask some questions from schedule 3. They can ask some questions from schedule 1. They can ask anything about the goods, about the services. So you have to do all these MCQs and you will get everything. You will understand what type of question they can ask you in the exam. 30. I am explaining 30 again. In 30th question, a chartered accountant firm is importing from their relative for their consultancy services free of cost from their relative. So it is covered in schedule 1. If it is covered in Schedule 1, it means it is liable for GST. So how much is the GST will be applicable? The value is around 4 lakh. So 18% of the 4 lakh is 72,000. Now whether it is CGST, SGST or IGST, of course IGST, because on import we have to pay IGST. That is regarding 30. Tell me any other doubt in these questions. Uh, Again, pardon? Case A means we are talking about 27th question. 27. 31, 31, 31, 31. Okay. Goods supplied by a company to its agent. Schedule 1. It is covered in Schedule 1. Principal supplying goods to his agent without consideration, it is also a supply. So in the first case, a firm is supplying free of cost to its agent. Of course, it will be a supply because it's a consignment. Principal is sending goods to its agent. It is a supply. It is covered in Schedule 1. We are finding which is not a supply. So the correct answer is C. Okay. Complete amount is taxable. Complete amount is taxable. If it is crossing 50,000, it is not a basic exemption limit. Complete 52,500 will be taxable. Okay. No, it should be value of the goods, value of the goods, value of supply. So even if I am recovering 3 or 4,000 rupees, it doesn't matter. The value of supply is more than 53,000, 50,000, na? What I am supplying, the value of that amount should not exceed 50,000. Okay? If it is, listen, if it is a supply, then employer can avail ITC. If it is not a supply, then employer means if the gift is less than 50,000, then he cannot avail ITC. If the gift is more than 50,000 and he has to pay tax for that, then of course he can claim ITC. So it totally depends where on outward side tax is leviable. If on outward side tax is leviable, then he can claim ITC on inward side. So if the gift is less than 50,000, he cannot claim ITC because it is not a supply. Okay? I have to reverse. I have to reverse. Of course, I have to reverse. I cannot claim the ITC if I am gifting and the value is less than 50,000. It is not a supply. Then I cannot claim. And if I have already claimed, I have to reverse that ITC. I cannot claim that. This is reversal with interest. No, because at that time we don't know that we will be gifting that item. So it is not my mistake. I am reversing right now because I got to know that this is not a supply. So I don't have to pay any interest on that amount. Okay, nice. So we are starting with the third topic now. We have already discussed a lot about the supply and everything. Now we have another topic, and that topic is called levy collection and charge of GST. Our third topic is levy collection and charge of GST. So we are starting with this topic. Levy collection and charge of GST. Now, first of all, what is our charging section? In GST, section 8 talks about supply, but exactly the charging section in our GST is section 9 of CGST. In IGST, there is a similar section, that is section 5. In GST, section 9 talks about the charging section. Now, what it says, very simple, section 9(1) of CGST and section 5(1) of IGST is completely same. They says that if the person is doing any kind of intra or interstate supply, then GST will be reviewable. But this is very interesting. This is very important to understand that what will be the highest rate of GST. Now this is very interesting. Listen everybody. Just a second, I will adjust the screen because some part is not visible. Now it is visible. Okay. So according to section 9, if any person is doing any interstate supply or intrastate supply, he will be leviable with IGST or CGST or SGST. But what will be the maximum rate of GST? This is very important. Rate of GST is CGST cannot exceed 20% and IGST cannot exceed 40%. they can ask you in the MCQ pattern questions that what can be the highest rate of GST. Right now in India, government does not levy GST more than 14%, but the maximum rate permissible according to Act is 20% CGST, 20% SGST, and if you are charging IGST, then it is 40%. So remember that CGST rate cannot exceed 20%. So the government has the scope. If they want, they can increase the rate up to 40% GST. 20% CGST, 20% SGST, and IGST rate can be 40%. Again, one more question they can ask you in the exam. Who recommends the rate of GST? I think everybody knows the answer. The rates of the GST are recommended by the GST Council. GST Council meets a lot of time frequently, and they decide what rate should be applicable on different commodities. So rate of GST is actually recommended by the GST Council. So this is about the charging section, that if I am supplying intrastate or interstate, then I have to pay the GST. Rate of GST cannot be more than 20% if it is CGST and IGST 40%, and rate of GST will be recommended by the GST Council. One more question that is covered in section 9 is, what about who is liable to pay GST? This is very interesting. This is very interesting, who is liable to pay GST. I think there are two parties involved in any transaction. One is called supplier and another is called receiver. Yes, there are two parties involved in each transaction, seller or buyer. In GST, we call them supplier and receiver. All the transactions are GST are basically divided into two parts: normal charge, forward charge, or reverse charge. Normal charge is also called forward charge. Another one is called reverse charge. So who will pay GST to the government? It's a very interesting question, and the answer is very simple: whether my transaction is covered in forward charge or reverse charge. In short, it is called RCM, reverse charge mechanism. I think everybody is familiar with this word, RCM, reverse charge mechanism. So if my transaction is covered in reverse charge mechanism, then liability to pay tax to the government is not on the seller, it is on the buyer. Normally what happened is, if you are going to the grocery store, you are going to a mall and you are buying something, what the seller will do is, seller will collect the tax from you and pay to the government. Seller will pay to the government. They will collect the tax from you and they will pay to the government. That is called normal charge, forward charge. But in some cases, government applied reverse charge mechanism, where the tax will not be collected by the supplier. The receiver will directly pay the tax to the government. Yes, receiver will directly pay. Receiver will not pay the tax to the supplier. Receiver will directly pay tax to the government. That concept is called reverse charge mechanism. So in GST, there are two different of charges. Normally, by default, we will assume that it's a normal charge. Only for few cases where the government feels like it is quite easy to collect tax directly from the customer, not from the supplier, they applied the RCM, reverse charge mechanism. So now we have to understand where RCM is applicable, in what cases RCM is actually applicable. By default, if something is not given, then we can say it's a forward charge. But if it is specified in reverse charge, then we have to understand that where RCM is given. And there are a lot of situations where RCM is given. I am covering it here right now. Listen carefully. Basically, section 9 divides into 5 parts. First of all, 1 second. Yeah. I can't hear you, Praveen sir. Please, can you write down in the chat box if it is possible? Okay. Okay. Listen. Section 9 is divided into 5 parts. Kindly share the notes. This is the link of your, this is the link of the Google Drive. Now you can download from here. Listen, section 9 actually, in case of import, okay, I will discuss all the points. Listen carefully. Section 9 talks about the charging section, in which 9.1 is about charging. 9.2 says about GST on petroleum commodity. Government want to introduce GST on petroleum commodity, but they are waiting for the recommendation of GST Council. Section 9(2) says that GST on petroleum will be levied only after the recommendation of the council. So the council will meet, they will decide whether now they are ready to they are ready to introduce GST on petroleum products. Then they will recommend to introduce the GST on petroleum products. Right now, petroleum product is not covered under GST. What about RCM? Under section 9, we have three sections: 9(3), 9(4), and 9(5). These three sections talks about the RCM. And first of all, we are starting with 9(3). That talks about a lot of cases where reverse charge mechanism is applicable. Now look at the slide. I will do it slightly faster. So please read the slide with me very carefully. The very first point which is covered in RCM is government services, but except for post office, transportation, port, airport, and renting of immovable property. Other than these four services, if government is giving any other services, then it is covered under RCM. Like if the government is giving any services relating to lab testing, or any services regarding to licenses, like they are distributing spectrum licenses, they are distributing mining licenses. So now who will pay GST? Like if the government is distributing the spectrum licenses, Vodafone Idea, Airtel, they are buying that licenses. So who will pay the GST on that spectrum licensing fees? Vodafone Idea will directly pay to the government. The department who is allotting these licenses will not pay the GST. The Vodafone Idea will directly pay the GST to the government. So government, except for RCM, is applicable. What are these four where RCM is not applicable? Post office. Of course, when we are going to the post office, I will not be paying the GST. Post office will pay GST. Transportation, like Indian Railways, they will collect the GST from my ticket. Supplier will pay GST, customer will not pay GST. Port, airport, I am using any services at port, I am using any services at airport. Of course, airport authority will pay GST, customer will not pay GST. And renting of immovable property. Except these four, in all the other services, if the government is giving any services, then RCM is applicable. Receiver is liable to pay GST. Second one, goods transport agency. Yeah, government, it should be business entity. It should be business entity. Because actually for that we have to understand the exemption as well. If the government is providing any services to individual for non-business purpose, it is an exempt service, already exempt. So there is no liability to pay any GST in that case. I am talking about the services which are taxable. Individual services provided by the government is actually exempt. There is no GST on that. So no question arises whether who will pay the GST. I am talking about the services which are taxable. If the government is providing any services which is taxable, then on that case RCM is applicable. Next, goods transport agency. Goods transport agency means these truckers, these transport agencies who are supplying our goods. Again, they are the GST will be payable by the company, by the receiver, not by the transport agency, if they have opted an option of 5%. Actually, GTA has two options to pay GST. Either they can go for a rate of 5% without ITC and 12% with ITC. So if a transport agency opted an option of 5% without ITC, then they will not pay GST. The GST will be paid by the receiver only. Like if I am transporting some raw material for my factory, then the transporter will not pay GST on that freight. I have to pay the GST on that freight. So GTA is also covered under RCM. Third one is lawyer and arbitral tribunal services. Interesting. Sarkar will not collect any tax from the Kala court. Everybody fears from three court: police, doctor, and lawyer. So government will not collect any tax from the lawyers. Lawyer legal services, court representation services, on that services, the business entity who is receiving that services, the corporate who is receiving the services will be liable to pay GST, not the lawyer. So lawyer will not pay GST. The customer will pay GST in case of legal services and arbitral tribunal. Next one is banking related services. In this there are few: recovery agent, direct selling agent, and business facilitator. What they are doing is, these are the agents of the bank and they are providing services to bank. So who is giant? Who is giant here? Those small agents are the giant, or bank is the giant? Bank is the giant. So government will directly collect tax from the receiver. Bank is the receiver. Bank will pay GST in that case. So interesting is a recovery agent, Vasuli Bhai. Recovery agent is giving services to bank. Direct selling services is giving services to bank. Business facilitator is giving services to bank. Bank will pay GST. They will not pay any GST. RCM on GTA services is 5%. Okay, I am talking about 5% rate. If GTA is going for 12%, now there is no RCM. RCM will be applicable if the GTA is opting for 5% without ITC option. If it is 12% with ITC option, then the normal charge will be applicable. RCM will not be applicable. RCM will be applicable if the GTA has opted an option of 5% without ITC. Okay. Next, there are some more RCM like renting of motor vehicle as well. Like likewise GTA na, if you are renting a motor vehicle and that taxi company opted for 5% without ITC, then again RCM will be applicable. Yes, same with GTA, same with the renting of motor vehicle. If in case of renting of motor vehicle 5% option was opted, that is without ITC, then RCM will be applicable. It is more again interesting. Independent directors giving services to the company. What company will be paying to the independent directors for the services? If independent directors sitting fee. So on sitting fee, company will pay GST. Directors will not pay GST. Company will pay GST. Okay. Next, life insurance agent, like LIC agent. If a life insurance agent is, Vishal is asking, sir, it is also applicable for non-executive directors. All the directors who are getting the sitting fees. There are two types of directors. Everybody knows there are two types of directors, executive and non-executive. Executive directors doesn't get the sitting fees. They get the salary. So my question is from all of you guys, whether GST will be leviable on the salary portion of the director? No, because that is covered in Schedule 3. Schedule 3. That is covered in Schedule 3, employer-employee. But about the non-executive directors who are getting the sitting fees, GST will be leviable. Now who will pay the GST, company or the director? Company will be paying the GST as a receiver. Getting my point? Next, life insurance agent. If it is a LIC agent, then LIC agent is giving services to insurance company. LIC is the giant. They are going to pay the GST, not the LIC agent. LIC will pay GST on the behalf of the agent. There is one more RCM for author, music and composer. Like T-Series. T-Series is producing an album. So T-Series will be receiving services from author, T-Series will be receiving services from composer, T-Series will be receiving services from artist. So in all these cases, who will pay GST? T-Series will pay GST as a receiver, because T-Series is a giant, that producer, that publisher is a giant. So that producer, that publisher will be paying the GST, not that artist. So on the behalf of artist, that producer company, that publisher company will be paying GST. Are you getting it? Yes. So in all these cases, tax will be payable by the receiver, not by the supplier. There is a one interesting question. So like if the bank is paying GST on the behalf of the recovery agent. Yes. If recovery agent is giving services to bank is paying GST on the behalf of recovery agent. Question arises is whether ITC will be available to bank or not. On RCM. On RCM services, if somebody is receiving RCM services, whether he can claim ITC? Of course. It doesn't matter whether the tax is payable under forward charge or reverse charge. If I am receiving any services which is connected to my business, of course ITC will be available. It does not depend on who is liable to pay. Ultimately, the tax is borne by the consumer, tax is borne by the receiver. He can claim ITC. He can easily claim the ITC. So even on the RCM, ITC can be easily claimed. Very nice. There are 3 or 4 more RCM, but it is covered under 9 subsection 5. And this RCM is actually for e-commerce operator. Renting of motor vehicle, Kiran is asking what is the rate applicable. There are two options, 5% to 12%. Renting of motor vehicle, 5% without ITC, 12% with ITC. If that person have opted 5% without ITC, then RCM will be applicable. And if he has opted 12% with ITC, then normal charge will be applicable. Okay? Got it? Nice. So there is uh, okay, we are charging 18% in our organization. So depend upon the situation whether it is renting of taxi services or radio taxi. There are different cases. What rate RCM will be applicable? Actually rate will be same, 5% only. If he has opted for 5%, then the rate will be 5% only. 5% only. Okay. There is one more question, sir. 9(4) is applicable or not? Purchase from unregistered person. Actually, there is only one notified case where 9(4) is applicable right now. That is for construction services. If builder is buying something from unregistered person, then RCM is applicable. I have written that in the first slide. In the first slide, I have written that if the builder is buying from the unregistered person, then under 9(4), RCM is applicable. I have covered that in the first slide, 9(4). Builder buying from the unregistered person. So 9(4) is applicable only and only in one case, that is construction service. In all the other cases, there are some RCM under 9(3) and 9(5). 9(4) only one case, that is construction. Now talking about 9(5). In 9(5), it talks about RCM and when the goods services are supplied through e-commerce operator. What is the first case? The first case is radio taxi services. We are basically talking about Ola and Uber. Driver is supplying services through Ola and Uber. Now supplier is the driver and customer is the receiver, and Ola, the services are supplied through Ola. So ultimately, who is going to pay the whole tax amount on this service? Ola. E-commerce operator is liable to pay GST in this particular situation under 9 subsection 5. So if the radio taxi services are provided by the e-commerce operator, that aggregator, that is Ola and Uber, that aggregator is liable to pay GST, not the driver. And in all the cases, aggregator will be paying the GST. There is no if, there is no but. In case of radio taxi, always the aggregator will be paying the GST on the behalf of the driver. This is again very interesting. Second case is hotel accommodation. Here the aggregator is like MMT, like GoIbibo. So who will be paying GST if the hotels are booked through MMT or GoIbibo? Now, e-commerce, that is MMT, will pay GST, but there is if. There is if. And RCM is applicable here only if hotel is unregistered. Only if hotel is unregistered. So this is very important to understand. RCM will be applicable here only if hotel is unregistered. In Ola Uber, there was no if. So driver is registered or unregistered, it doesn't matter. Always the Ola will pay GST. But in case of hotel accommodation, hotel will pay GST if he is registered. If hotel is unregistered, then MMT and GoIbibo will be paying GST as an e-commerce operator. So 9(5), hotel accommodation, RCM will be applicable if hotel is unregistered. Third case, it is regarding housing maintenance and housekeeping services. There is a app called Urban Clap. Urban Clap. In case of Urban Clap, there is a clause that carpenter, if the carpenter or any kind of housekeeping person, he is supplying goods, he is supplying services through any e-commerce operator. Again, the e-commerce operator will pay GST, but again there is if. If the carpenter or if the plumber or if the electrician is unregistered. If the electrician is registered, then e-commerce operator is not liable to pay GST. If the supplier is unregistered, then only liability is on e-commerce operator. And according to the recent amendment from January 22, there is one more 9 subsection 4 services added, that is Swiggy and Zomato. So Swiggy and Zomato are providing food delivery services. They have to pay GST in each and every case. Whether the restaurant is registered or the restaurant is unregistered, no questions asked. It is always registered. Actually, there are two services flowing through in this transaction. Restaurant is giving services to Swiggy and Swiggy is giving services to customer. So customer is paying to the Swiggy and Swiggy is paying to the restaurant. So restaurant to Swiggy, Swiggy to customer. So as a receiver, Swiggy is the receiver na, so Swiggy is paying the tax here. Yes, so the complete tax liability is on Swiggy, because we are looking at the single transaction, but actually there are two transactions. Restaurant is invoicing on the restaurant is giving services to Swiggy, and Swiggy is giving services to customer. So basically it's a dual transaction, and between the restaurant and Swiggy, Swiggy is the receiver, and that's why Swiggy is liable to pay GST. And very interesting, now what we have to remember from these four cases: hotel and housekeeping. In both the cases, hotel and housekeeping, in both the cases, RCM on e-commerce operator is applicable only if hotel and housekeeping supplier is unregistered. If hotel and housekeeping is registered, then RCM is not applicable. But for radio taxi and restaurant, it is always e-commerce who is liable to pay GST, whether restaurant or driver is registered or unregistered. So MCQ question, they might ask you a question that under 9 subsection 5, in what kind of services e-commerce operator is not liable to pay if the supply is registered? So it's housekeeping and hotel. If the supply is registered, then e-commerce operator is not liable to pay. But other than housekeeping and hotel, if we are talking about the food delivery services, if we are talking about the Ola Uber, then always e-commerce operator is liable to pay GST. Okay. Now there is one more question. Sir, there is a TCS concept under these four cases. No. TCS will be applicable in other cases other than these four cases. So TCS is not applicable on 9 subsection 5 RCM cases. TCS will be applicable when the supplier is paying the GST and the aggregator is just passing the credit, passing the tax. So TCS will be applicable only in that case. So in this case, when RCM is applicable, there is no requirement of TCS. When the full tax is to be paid by e-commerce operator, then why to collect TCS and then passing on to the supplier? So in these four cases, there is no TCS. TCS will be applicable on those e-commerce transactions where 9(5) is not applicable. Like when the dealer is supplying goods through Amazon, when the dealer is supplying goods through Flipkart. In all these cases, TCS is applicable. Not on these cases. These cases are not covered in TCS. Okay? Got my point? Nice. So this is about RCM. RCM is covered in basically 9 subsection 3, 9(4) and 9 subsection 5. Now moving towards another important section. Yeah. होटल रजिस्टर्ड नहीं है तो आरसीएम एप्लीकेबल, होटल रजिस्टर्ड नहीं है तो ई कॉमर्स पे करेगा उसका टैक्स. यस, बिल्कुल सही है. उस केस में रेस्टोरेंट रजिस्टर्ड हो या ना हो, लाइबिलिटी इज ऑन स्विगी ओनली. रेस्टोरेंट के पास जीएसटी है, वो अपना बिल भी बना रहा है, लेकिन जब वो स्विगी के थ्रू गुड्स बेचेगा तो उसका जीएसटी उसको नहीं पे करना है, स्विगी खुद रख लेगा. मतलब इवन दे आर रजिस्टर्ड, दे विल नॉट बी पेइंग जीएसटी फॉर स्विगी सेल्स. ऑनलाइन सेल के लिए जीएसटी स्विगी भरेगा. एक्चुअली द ई कॉमर्स ऑपरेटर जिसके थ्रू ये सर्विसेज दी जा रही है, ये टैक्स भरेंगे 2 केसेस में विदाउट कंडीशन. कौन कौन सी? ओला उबर एंड फूड डिलीवरी. इन 2 केसेस में इन पे हमेशा टैक्स लगेगा, चाहे सप्लायर जिसका जो एक्चुअल माल बेच रहा है वो बंदा चाहे रजिस्टर्ड हो चाहे अनरजिस्टर्ड हो, टैक्स सरकार इन्हीं से लेगी. लेकिन बाकी 2 केसेस में, हाउसकीपिंग और होटल में, अगर वो ऑलरेडी रजिस्टर्ड हैं तो जिम्मेदारी इनकी नहीं है, फिर वो हाउसकीपिंग और होटल वाले की है. स्विगी रजिस्टर्ड नहीं हुआ ऐसा नहीं हो सकता. दे आर रिक्वायर्ड टू कंपल्सरी रजिस्टर्ड. इवन देयर टर्नओवर इज 0. 9(5) ई-कॉमर्स ऑपरेटर इज कंपल्सरी रिक्वायर्ड टू गेट रजिस्टर्ड अंडर जीएसटी. ओके, दैट टर्नओवर डजंट मैटर. टर्नओवर डजंट मैटर फॉर देम. ओके, Nice. Can you write down that question in the in the chat box? That will be helpful. TCS, I am not going to clarify TCS right now because I have to cover so much, and TCS is not in your syllabus, so I am not covering TCS right now. Okay, we can talk about section 10 right now. You can write down your query in the chat box. I will reply. In case of OYO, who will pay tax? Again, hotel is registered, then hotel will pay tax. OYO is if hotel is unregistered, then OYO will pay tax. Goa IPO, MMT, OYO, all these are basically same. So in case of OYO, if the hotel is booked through OYO, whether hotel is registered or not, if no, then OYO will pay tax. If hotel is already registered in their own name, then the hotel will be paying tax, not OYO. Nice. Now we can talk about composition. That is regarding section number 10. Composition is for small traders, and this scheme is very interesting. This scheme actually is an optional scheme which gives us an option to pay tax at a lower rate. But it is with some conditions, some terms and conditions that we have to follow. An interesting thing is composition is applicable only in few circumstances, and that we have to understand that who can avail this scheme, what are the eligibility of this scheme, and for this we have to refer this chart first. Composition can be availed only by three people first: manufacturer, trader, and restaurant services. So the person who is manufacturing, who is trading, who is restaurant services, they can apply for composition only if their aggregate turnover means total turnover, exempt, export, non-GST, taxable, all is not exceeding 75 lakh or 1.5 crores. Some states have the lower limit of only 75 lakh, while the remaining states have a limit of 1.5 cr. So if the manufacturer or the trader or the restaurant services want to avail composition scheme, then their previous year turnover should not be more than 75 lakh for the 8 states, and for all the other states it should be 1.5 cr. But this is only for manufacturer, trader, and restaurant services. Sir, what about the other service provider? For other service provider, there is one more scheme. It is also under composition scheme. If I am a chartered accountant and I want to go for composition, I will not be getting the composition under option 1. I will be getting composition under option 2 because I am a other service provider. I am not a manufacturer, I am not a trader, I am not a restaurant. So I will not be getting the above composition eligibility. I will be eligible for second option, that is as a other service provider, and there the turnover limit is 50 lakh rupees. So for manufacturing, trading, and restaurant, the service, for opting the composition, the limit is 1.5 cr or 75 lakh. For 8 states, it is 75 lakh. For all the other states and UTs, it is 1.5 cr. But if I am a service provider, then the limit is only 1 for all the states, that is 50 lakh rupees. If my turnover in the previous year is more than 50 lakh, then I am not eligible for composition under second. First, if I am manufacturer, trader, and restaurant, then my turnover should not exceed 75 lakh or 1.5 cr in the previous year. So this is the turnover limit. Sir, now what about the states? What are the 8 states where the lower limit is applicable? And what are the other states and UTs? I will explain you what are the name of the states where lower limit is applicable. But first remember the limits. 8 states, if I am manufacturer, trader, and restaurant, 8 states limit is 75 lakh. For all these states, limit is 1.5 cr. If I am other service provider, then the limit is 50 lakh for all these states. Now what are these names of 8 states? You have to remember the names. Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Uttarakhand. For these states, the limit for opting of composition is only 75 lakh. For all the states, the limit of opting the composition scheme is 1.5 cr. So will you remember the name of the states where the limit is lower? 8 states: Arunachal, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, and Uttarakhand. These are the 8 states where the limit is 75 lakh. For all the other states, all the other UTs, the limit is 1.5 cr. For Himachal Pradesh, for Jammu and Kashmir, for all it is 1.5 cr. 1.5 cr. It is 1.5 cr. Okay. So this is about the limits. 8 states, it is 75 lakh. For all the states and UTs, it is 1.5 CR. Okay, now listen carefully. There is one interesting question. Sir, I have two branches. One branch is in Manipur and another branch is in Madhya Pradesh. I have two branches. One branch is in Manipur and another branch is in Madhya Pradesh. So whether can I opt for composition scheme? What will be the turnover limit applicable? What will the turnover limit applicable if I have two branches, one in Manipur and one in normal state and one in special state? 75 lakh. Actually, yes, remember, if I am doing business in two different states now, always go for lower limit. Always go for lower limit. Yeah, so if I have one branch is in Manipur, my another branch is in Gujarat, then for my composition, opting for composition, my threshold limit will be 75 lakh. Sir, for Manipur it should be 75, for Gujarat it is for 150, so he can claim, if the turnover is more than 75, then he can claim composition in Gujarat na? No, composition can be availed pan-India basis. So you cannot avail composition for one state and not for another. It will be applicable for whole India. So my threshold limit will be calculated on pan-India basis and composition scheme will be opted on pan-India basis. I cannot do like that, that for one branch I can apply for composition and for another branch I can apply as a regular taxpayer. You cannot do that because composition is not the place of business. Composition is the person. The person having two branches, he will be composition person for both, or he will be regular for both. He cannot do like that, that I will be composition for one branch and I want to be a regular taxpayer for another branch. You cannot do like that. Composition scheme will be opted for whole pan-India basis, on whole pan-India basis. So composition will be opted for pan-India basis. Okay, so if I have two branches, for opting the composition, lower limit will be applicable. So my total turnover of the India should not exceed 75 lakh if my one branch is in a special category state and one branch is in normal state. Very nice. Now, I have already told you about that when we are calculating aggregate turnover, I will add all kind of supply, whether it is taxable supply, whether it is exempt supply, whether it is non-taxable supply and whether it is zero-rated supply. There might be some confusion between non-taxable and zero-rated or exempt. Listen, non-taxable means that supply on which GST is not leviable. Other taxes are leviable, like petroleum and alcohol. That is called non-taxable or non-GST supply because it is a supply but covered under old taxes, not GST. Exempt means rate is zero, it is exempt, no GST I have to pay on that. Sir, what is zero rate supply? Zero rate supply is basically export turnover. So export turnover will be treated as zero rated supply. So in GST, all the supply I can divide into 4 different types of turnover: taxable, exempt, non-GST and zero rated. Zero rated means exports, whether the export is outside India or when deemed export also covered here. So when I am supplying to SEZ, that is also an export. So supplying to SEZ or actually exporting the goods outside India is called zero rated supply. Okay, very nice. Now, this is the definition of aggregate turnover. That is what I have explained right now. That aggregate turnover includes taxable supply, aggregate turnover includes exempt supply, aggregate turnover includes zero rate supply, aggregate turnover includes non-taxable supply, and it should be calculated on pan-India basis, but it does not include inward supply under RCM. This is very important. Turnover will not include inward supply under RCM. Of course, it should not be included in my turnover because it is not my sale, it is my purchase. I am paying the tax, but I am paying the tax as a receiver, not as a seller. So inward supply under RCM should not be included in aggregate turnover. Second, tax will not be included in aggregate turnover. So I will also not include the tax amount when I am calculating the aggregate turnover. So turnover exclusive of tax, but all kind of turnover, whether it is taxable, non-GST, exempt, zero rated, it doesn't matter. It will be included in the definition of aggregate turnover. So my AT, including all supply, should not exceed 1.5 CR, 75 lakh and 50 lakh. For trader, manufacturer and restaurant, 1.5 CR or 75 lakh. For other service provider, it should not be more than 50 lakh rupees. Is it clear to everyone? Basically, only two things. Only two things. Because we are talking about those supply which is covered in old tax regime, that is non-GST. If it is not applicable in GST because government has exempted, then it is not a non-taxable. It's a exempt supply. So if it is non-taxable, it means we are talking about those supply on which other taxes other than GST is applicable. So basically petroleum and alcohol is covered in other taxes where we have to pay VAT excise duty on that commodity. Okay, nice. Moving towards the next important point. Sir, you were talking about the lower tax rate. You are talking about that the tax rate on the composition is less. So what are the tax rate applicable? These are the recent tax rates. So remember everyone, for manufacturer, the rate of tax of CGST, SGST is 0.5 plus 0.5% of the turnover. For trader, the rate of tax is again 0.5% or 5.5% of the turnover. And for restaurant, the rate of tax is 2.5 plus 2.5% of the turnover. So manufacturer 1%, 0.5, 0.5 CGST, SGST. Trader 1%, 0.5, 0.5 CGST, SGST. Restaurant 5%, 2.5, 2.5, and other services where the 50 lakh limit is applicable now, it will be 6%. 3% CGST and 3% SGST. Look at the slide. This is very important. If they are asking MCQ question in composition and they are asking practical question, they will definitely ask you about the tax rates. They will give you the turnover. They will ask you that what composition tax we have to pay. So just learn these rates. These are very important. Manufacturer trader 1%, restaurant 5%, and other service provider 6%. Other services, second category, where 50 lakh limit is applicable, like CA services, maintenance services, all the other services other than restaurant. All the other services other than restaurant, the rate of GST for composition will be 6%. So these are the rates: 1%, 1%, 5%, and 6%. Now, this is very interesting. If I want to avail the composition scheme, I cannot avail composition scheme if I am doing a interstate transaction. A person selling goods outside the state is not allowed to opt composition scheme, and that's why the rate of tax I have given in the previous slide was only CGST and IGST. I didn't tell anything about CGST and SGST. I didn't tell anything about IGST because composition person is not allowed to sell outside the state. He can buy from the outside state, but he cannot sell from outside the state. So he cannot make any interstate supply. Person who is supplying through e-commerce operator, a person, if he is supplying goods and services through e-commerce operator, like he is supplying through Amazon, he is supplying through Flipkart, he cannot opt composition scheme. This scheme is for small taxpayer. This scheme is not for online platform traders, dealers. So this scheme is not for those who are supplying through online e-commerce operators. Casual taxable person cannot opt composition scheme. You know what is casual taxable person? Casual taxable person means I am participating in any exhibition in different other state. I am going in any other state for temporary business. Then I will be treated as casual taxable person because I am casually doing business in another state. So for that state, I will be treated as casual taxable person. Next is non-resident taxable person. This is more like a casual taxable person, but the difference is very easy. A person coming from abroad in India to participate in an exhibition for temporary purposes. That person will be called NRTP. The person is doing business outside India, but he came to India and participated in an exhibition for temporary purpose. He is doing some business in any state. Then he will be called NRTP. Both CTP and NRTP are the temporary dealers, and that's why they will not get the benefit of the composition scheme. Their registration is also temporary, so they will not get the benefit of the composition scheme. So the person who is selling outside the state, the person supplying through e-commerce operator, casual taxable person, non-resident taxable person. Again, one more thing is important. A person who is dealing in non-taxable goods. A person who is dealing in petrol and alcohol, he cannot opt for composition scheme. A person who is supplying alcohol and petrol, he cannot opt for composition scheme. Now you have one doubt. I know might be one doubt that, sir, in the previous slide, you told us that aggregate turnover should include non-taxable supply as well. And now here you are saying that a person who is opting composition scheme cannot do non-taxable supply. So it's basically a controversy. No. You know why? Because for aggregate turnover, we will be looking at the previous year. And here we will be looking at what a composition person cannot do. So if they want to opt for composition, now they cannot sell non-taxable supply. In the previous year, they were not in a composition scheme. They were a regular taxpayer. So of course, they can do anything what they want to do. But if they want to opt for composition, now they cannot supply non-taxable goods. So these all conditions are for the current year. These are all conditions are after opting the composition scheme. Means after opting the composition scheme, you cannot sell outside the state. You cannot sell through e-commerce. You cannot go and participate in the exhibition in another state. You cannot sell alcohol or petrol. And you cannot manufacture these notified goods. These manufacturers are not allowed to offer composition. This is the updated list because from January 22, there is one more name added in this. Pan masala, tobacco, aerated water, ice cream, and there is one more, bricks. Now the notified goods also include one more item, that is bricks. So if you are manufacturing bricks, you are manufacturing ice cream, you are manufacturing aerated water, you are manufacturing tobacco, you are manufacturing pan masala, you are not allowed to opt for composition scheme. But this is for manufacturer. So if you are dealing or you are trading in that, then there is no problem. The problem is if you are a manufacturer and if you are manufacturing pan masala, tobacco, aerated water, ice cream or bricks, you are not eligible for composition scheme. So this is very interesting to understand that who are ineligible for composition scheme. Varsha is asking a very interesting question. I have two branches in different state and I am opting for composition. Sir, whether I can transfer my goods from one branch to another branch? You cannot. Because if you are transferring the goods from one branch to another branch, then it will be an interstate transaction. And composition person is not allowed to do interstate transaction. So interstate transaction is disallowed and you cannot transfer between interstate branches if you are availing the composition scheme. Can composition scheme change year to year? Yeah, it depends. Every year you can enter in the composition scheme. In next year, if you want to opt out, you can opt out of the composition scheme. That will be decided on year to year basis. After bricks, roofing tiles is also written. Roofing tiles. Roofing tiles. छत पे लगने वाली tiles. Roofing tiles and bricks. जो छत पे bricks जैसे छत पे कवेलू लगते हैं. That कवेलू is called roofing tiles. So pan masala, tobacco, aerated water, ice cream, bricks and roofing tiles. These are the items if you are manufacturing. These items you are not allowed to opt for composition scheme. These are the ineligibility. In MCQ, they might ask you this question that what are the items which are ineligible under composition scheme? So the manufacturer of pan masala, tobacco, aerated water, ice cream, bricks and roofing tiles. They are not allowed for composition scheme. Now there is one more interesting condition, and this condition is also very interesting. Listen very carefully. A composition person is not allowed to claim any ITC. The rate of tax on composition person was low because there was no ITC. That's why they are asking us to pay only 1% or maybe only 5% or 6%. Because they are not giving us any credit. So first, no ITC. Second, the composition tax that I have to pay, like I have to pay 1% on my turnover, that tax I have to pay from my own pocket. I cannot charge that 1% from the customer as well. So if my price of the goods is 100 rupees, then on the invoice, I will only be writing 100 rupees as in price. I will not add any tax in that, and out of that 100 rupees, 1 rupee I have to pay to the government from my own pocket. I cannot issue tax invoice to the next person. I cannot charge tax from the next person. So that 1 rupee I am paying, I have to pay from my own pocket, means that 1 rupee will be expense for me. I have to debit that 1 rupee as an expense in my P&L account. This is my expense. I cannot shift the burden to the consumer. Of course, I will be paying that 1% from my own pocket. I cannot charge that 1% from the customer, and that customer will not get any ITC of that. Third important thing, I have to mention in the invoice that I am a composition dealer and I will not collect any tax from the invoice. And finally, composition scheme can be availed only on pan-India basis. I have told you right now that we cannot opt composition scheme for one branch. If I am opting for composition scheme, I should be eligible on pan-India basis. If I am eligible even for the single branch, I cannot claim composition scheme anywhere. There is a Hindi metaphor for this. मिलेगा तो सबके लिए, नहीं तो किसी के लिए भी नहीं. So if you want to opt for composition scheme, लेना पड़ेगा तो सबके लिए लेना पड़ेगा. Otherwise किसी के लिए भी नहीं मिलेगा. Means if you are ineligible for one branch, you cannot get the composition scheme anywhere in India. So then what is the benefit of opting composition? Actually the rate of tax is very low, Shalu. The rate of tax is so low that even when I am not claiming the ITC, even when I have to pay the tax from the pocket, I will be in the profit. My profit will be higher because the rate of tax is very low. Even on the 18% of rate of GST commodity, I will be paying only 1%. So my rate of tax is so low that even after all these conditions, composition scheme will be beneficial for me. Stock transfer from one state to another state not allowed because it's an interstate transaction. Composition scheme is dealers are not allowed stock transfer from one state to another state because that is an interstate supply. Composition dealer have to file return, yes, GSTR 4. They have to file CMP 08 and GSTR 4. Two returns, CMP 08 and GSTR 4. Yeah, disadvantage is basically the purpose of composition scheme is only to get benefit to the retail sellers. Composition scheme is not for the wholesalers who are selling outside the state. The purpose of the government to introduce this scheme is to just get the benefit to the retailers, and retailers are not going to sell outside the state. Retailer will always sell only local, and that's why they can get the benefit of the composition scheme. Nice. Now in our MCQ booklet, yeah Manoj. It should be on pan India. Yeah, like I can take an example. Okay, I will give the answer. First of all, about pan India. If I have two different businesses and one is eligible, one is ineligible, okay, I cannot avail composition scheme for anyone, because if on my PAN number I have two businesses, one is eligible for composition, one is not eligible, I cannot opt composition scheme because मिलेगा तो सबके लिए नहीं तो किसी के लिए भी नहीं. So if I am not eligible for one business, I cannot avail anywhere. Okay, sir, composition dealer is taking security services, then what rate he will be pay? Okay, Kishore, this is very important. Listen, on purchase the rate will not change. So if I am purchasing something, I will be paying the GST on the normal rate. This rate is only for the sale, what I am doing. So if, for example, I am using the lawyer services, and rate of GST on lawyer services is 18%. So on RCM basis, I will be paying GST only on 18%, not on 1%. The rate of 1% is only on my turnover. On my purchase, I will be paying full GST as a regular taxpayer. My rate of GST will be reduced only and only on the sale, not on the purchase. That is very important to understand, okay? Any other doubt? Kishore, can you write down in the chat box if it is possible? Please write down in the chat box. Now, it's for your home. From question 36 to 62, you will find a lot of questions about RCM, about the composition scheme, and about the charging section in your MCQ booklet. So from question 36 to 62, this is for your home, because there are a lot of questions, like more than 28 questions. So it is not possible to cover this right now. It is for your homework. When you are revising this session today or maybe tomorrow, just do these MCQs from the booklet, and that is more than enough. That will be useful for practicing the questions. RCM including the turnover? No, I have already told you that in aggregate turnover, inward supply under RCM is not included. So RCM will not be included in my turnover. Two separate registration can be taken for two different business in the same state. Yes, wherein it is optional. If I want to take two separate GST for two different branch, it is optional. I can get two different GST for that. Please provide booklet. I have already shared the link beta. On that link, you will get all the notes, even the MCQ booklet as well. It is in the link, Google Drive link. Nice. Now, this is about the charge of the GST. So we are now moving towards the another topic. We have covered introduction of GST. We have covered supply. We have covered charge of GST. Now I am taking you to our another topic. And what will be the next topic we will be covering? Time of supply. After section number 7, 8, 9, 10. Now we are going to cover another topic, and that topic is time of supply. Kishore, composition person cannot claim any credit. So how can you ask this question, Kishore? Composition person is not allowed to claim any ITC. Okay, nice. Now we are starting with another topic, and that topic is time of supply. I am zooming the screen so everybody can see this topic. Listen. For time of supply, what I did is, I created a table. It's summary chart that will help you a lot in revising this topic, time of supply. Yeah, I just created a chart in which complete section 12 will be covered in one page, complete section 13 will be covered in one page, and complete section 14 will be covered in one page. So just 3 pages will cover the topic time of supply. And first of all, which section we have to cover for understanding this concept of time of supply? 3 sections. Section 12, section 13, and section 14. 12 talks about time of supply of goods, 13 talks about time of supply of services, and 14 talks about change in rate of tax. So now what about time of supply of goods? Very interesting. There are many cases for time of supply of goods in which general clause is the most important case. General clause. That says that what is the time of supply means when I have to pay the GST. There are 2 dates we have to compare. What are these 2 dates? Date of invoice or due date of invoice, whichever is earlier. Yeah. So in these 2 dates, I have to compare which date is earlier. That date will be time of supply in case of goods general clause. Means generally, what is the time of supply? So date of invoice or the due date of invoice, whichever is earlier. So in short, I can say DOI or DDI, whichever is earlier, is the time of supply in general case. Now the question arises, sir, what is the DDI? I know what is date of invoice. Date of invoice means the date which is written on the invoice. But what about the due date of invoice? For this, I have to refer a section 31. What this section 31 says, that if I am dispatching the goods, then the date of dispatch is the due date of invoice. Means I have to prepare the invoice on the date of dispatch. When I am dispatching the goods from my factory, I have to prepare the invoice. So this date or the invoice date, whichever is earlier, is the time of supply. Normally, of course, invoice date will be earlier. But if the invoice is late, I have not prepared the invoice on the date of dispatch, then the date of dispatch is the time of supply. So if I have prepared the invoice before dispatch, then date of invoice is the time of supply. If I have not prepared the invoice before dispatch, then date of dispatch is the time of supply. Yeah. But sir, if some goods involves installation, then what will happen? Then installation is the due date of invoice. If my goods need installation, then the date on which I am installing the goods, on that day I have to issue the invoice. If I issued the invoice before that date, then date of invoice is the time of supply. If I have not issued the invoice before that date, then date of installation is the time of supply. So if my goods need some kind of installation, then it will be date of installation. We are right now talking about goods. Later we will discuss about services, but right now we are talking about the goods. So in case of goods, date of dispatch or date of installation is the due date. So if I am issuing the invoice before that date, then date of invoice is the time of supply. If I am issuing the invoice after this date, then then due date of invoice will be the time of supply. It is for goods right now. We are discussing section 12. For services, we will be discussing section 13. Okay. Now, sir, what in case of approval? This is very interesting. In case of approval, the due date of invoice will be date of approval or 6 months from the removal, whichever is earlier. So yeah, now there is no dispatch, because everybody knows, I have already told you that on dispatch I will not be paying the GST. On dispatch I will not be preparing the bill in case of sale on approval. In case of sale on approval, I will be preparing invoice when I will be receiving the approval. But what if I am not receiving the approval? Then they are giving a time limit of 6 months. So whichever is earlier is the due date of invoice, and date of invoice or due date of invoice, whichever is earlier, is the time of supply. So general clause, what it says, DOI or DDI, whichever is earlier is the time of supply. What is DDI? Dispatch, installation, or approval, or 6 months from the approval. Depend on the case. If it's a general clause, then dispatch. If it is related to installation, then installation. If it is sale on approval, then approval or 6 months, whichever is earlier, is the due date of invoice. So we will be comparing between date of invoice and due date of invoice. Okay. But if the case is regarding RCM, then the time of supply will be different. Because in a case of RCM, the tax liability is on supplier or receiver. Please tell me. In case of RCM, who is liable to pay tax? Supplier or receiver? Of course, receiver. So from the point of view of receiver, the time of supply will be different. Now that is not date of dispatch, date of recipient of the goods. Date of receipt of the goods, when the goods are received, that date, or date of payment, or from the date of invoice 31 days, whichever is earlier. So three dates we have to compare: date of receipt of goods, date of payment, date of invoice plus 31 days, whichever is earlier is basically the time of supply for RCM. So date of receipt of goods, date of payment, and 31 day from the date of invoice, whichever is earlier is the place of supply for time of supply for RCM. Now what about interest on penalty on late payment? Listen very carefully. I have prepared the invoice, but the payment was late, and therefore I also charged interest on that. Sir, whether I have to pay GST on that interest amount as well? Yeah. My original bill was for rupees 1 lakh, but I also have to collect the interest because the payment was late. So I am receiving an interest of 10,000 rupees. So what will be the time of supply for interest? Of course, it will not be the actual invoice date, because on that date I don't know that I will be receiving any interest. So interest will be received later. So the date of actual receipt will be the time of supply in case of interest or penalty on late payment. Interesting case on which they can ask you an MCQ. Vouchers. If I am not selling goods, right now I am selling voucher of any goods. Like you can buy a voucher right now and buy something later. So in that case, what will be the time of supply? It depends whether voucher is identifiable or not. I don't know from this voucher what kind of goods I can redeem. I don't know that. If I don't know that, then please pay the tax only on the redemption, because only on that date you will find out that what goods are actually sold. But if the voucher is identifiable, I know what kind of goods this voucher will be redeemable, then on the selling of voucher I have to pay the tax. So if the voucher supply is identifiable, then date of issue of voucher. If supply is not identifiable, then date of redemption of voucher. That is the time of supply for vouchers. So this is regarding the time of supply for goods. Again I am repeating one more time. What are the time of supply? For general clause, tell me now, you have to tell me. For general clause, what is the time of supply? Earlier of what? Earlier of DOI or DDI? Yes, earlier of DOI or DDI. Yes. For RCM, it is not DOI, DDI. For RCM, it will be receipt of goods, date of payment, or from invoice, they will count 31 days, whichever is earlier. For interest, actual receipt of interest, whenever I will receive the actual interest, I will be paying the tax. For voucher, if it is identifiable, then date of issue of voucher. If it is not identifiable, then date of redemption of voucher. That is regarding the time of supply for goods. Now, what about time of supply of services, sir? This is about section 12, time of supply of goods. What about time of supply of services? In time of supply of services, voucher is exactly same as section 12. So even if the voucher is regarding services, the same clause will applicable. Identifiable, then issue of voucher. Not identifiable, then redemption of voucher. Interest or penalty, same. If I am receiving the interest later, I will be paying the tax on that interest later only. The main point is regarding general clause. This is very important. This is very important. Listen, this is very important. They might ask an MCQ from this point. This is very important. So listen very carefully. In general clause, I have two different cases. For this, first I have to look whether I have prepared the invoice on time or late. Yeah. For deciding what should be the time of supply for services, first I have to decide whether my invoice was prepared on time or it was late. If my invoice is before the due date, then my time of supply will be invoice or payment, whichever is earlier. Invoice or payment, whichever is earlier. But if I have not prepared the invoice on time, then they will delete the invoice from the time of supply and they will say date of supply of service or date of payment, whichever is earlier. So please look at this point on the screen. This is very important. A and B. If the invoice is prepared before due date or on due date, like my invoice is prepared on time. My invoice is prepared on time. Sir, what is the time? I will let you know what is the time. Okay, I will let you know. The time is very simple. 30 days from the date of supply. So when I have supplied the services, if I have prepared the invoice within 30 days from the supply of service, then time of supply will be date of invoice or date of payment, whichever is earlier. But if I have not prepared the invoice within 30 days, then time of supply will be date of supply of service or payment, whichever is earlier. So we have to check whether my invoice is prepared within 30 days from the supply or late. If it is prepared within 30 days from the supply, then DOI or DOP. If it is late, then it will be DOS or DOP. So here we have to decide, very important, whether the invoice is prepared on time or is it late. So what is the time limit, sir? It is 30 days from the supply. It is written below. So for normal, it is 30 days. For bank and NBFC, it is 45 days. So for bank and NBFC, my invoice is required to be prepared in 45 days. For other service providers, all other service provider, the invoice is required to be prepared within 30 days. So for normal service provider, if my invoice is prepared within 30 days, then what is the time of supply? Tell me. If my invoice is prepared within 30 days, whether I will be going for A or B? If it is within 30 days, A. And if it is late, if it is after 30 days, then I will be choosing between B, that is date of supply or date of payment. If it is within 30 days, then I will be considering invoice or payment. If it is after 30 days, then it will be supply or payment. Will you remember this? If the invoice is within 30 days, then invoice or payment. If it is late than 30 days, then supply or payment, whichever is earlier. This is about the general clause. Okay. Sir, in RCM, if RCM is related to services, then time of supply will be, we have already covered that in goods, but there is a slight difference. There was date of invoice plus 31 day. In services, RCM, time of supply will be date of invoice plus 61st day. So double time limit. Not 31 day, it will be 61 days from the invoice or date of payment, whichever is earlier. There is no date of receipt of goods because these are not goods, these are services. So I cannot write down date of receipt of goods. So date of receipt of goods is not here, but date of payment or date of invoice say 61 days. So basically 61 days from the date of invoice. That is the difference between 12 and 13. Okay. There is one more interesting case in section 13. It is about import of services from associated enterprises. Yeah. If I am importing something from my relative, I have told you that it is covered in Schedule 1. And if I am importing it without consideration, then also I have to pay the GST. So what is the time of supply in that case? Date of entry of purchase, date of entry of receipt in books of account, or date of payment, whichever is earlier. So if I am importing something from my relative, and if it is without consideration, then date of entry in the books of account is relevant date. And if I am paying something, then entry or payment, whichever is earlier, is the time of supply. It is for import from relatives. So this is all about section number 13. So what is the difference in 12 and 13? Only in the general case. In general case, section 12 says DOI or DDI, whichever is earlier. In section 13, general case, it says that please check whether the invoice is prepared within 30 days or later than 30 days. If it is within the 30 days, then DOI or DOP, whichever is earlier. If it is late than 30 days, then it will be DOS, date of supply of service, or date of payment, whichever is earlier. But for bank, rather than going for 30 days, we have to go for banking and NBFC, what is the due date of invoice? 30 or 45? 45. For normal service provider, it will be 30. For bank and NBFC, it will be 45 days. Nice. So this is about section number 13. Now, there is one more section 14 that talks about change in rate. I got a very simple formula to apply this provision. Very simple. What we have to consider, very simple, only majority kidhar hai. Where is the majority? We have to look at the three things. When the services are actually supplied or goods are already, when the supplies happen, payment and invoice. Out of these three, if two are on the one side and one is on the other side, of course it is possible because it is an odd number. So there might be balance. Always one side the weight will be higher. So we have to just apply the concept of weight. Where is the majority? Like in the first case, invoice is before the rate change, supply is before the rate change, and payment is after rate change. Tell me what rate will be applicable. You have to tell me what rate will be applicable if invoice and supply both are before rate change and payment is after rate change. Old rate, because majority is towards old rate. Second, payment is before rate change, supply is before rate change, invoice is after rate change. Tell me what rate will be applied. What rate will be applied? Again 5%. Payment and invoice both are at older rate and supply is after rate change. Again 5%. Now, payment is at 5%, but supply and invoice both is at 12%. Now what rate will be applicable? Old or new? New, because majority is towards new. Supply is also supply is after rate change and invoice is after, also after rate change. So rate of 12% will be applicable. Next example. Invoice 5%, supply and payment both is 12%. What rate will be applicable? 12%. So in section 14, we have to apply a simple rule. Where is the majority? If out of three, two things are on the one side, of course two things will be on the one side, then that rate will be applicable. So if invoice and payment is before rate change, supply is after rate change, older rate will be applicable. If two things are after, on the new side rate and one thing is only on the old side, I will be going for new. So this is the principle I have to follow under section number 14, change in rate of tax. Tell me, is there any doubt in regarding change in rate of tax? Is it clear? I can't hear you. Can you write me? Can you write down in the chat box, please? I can't hear you. In section 14, in both the cases, the section is same. So whether it is supply of goods, supply of services, the rate change section will be same. All same for both the situation, whether it is goods or services. Okay. Nice. So this is about section 14, change in rate of GST. There is one more case, continuous supply, but I don't think so that is relevant for the MCQ purpose, because in continuous supply there were due date of payment, date of payment. That is not relevant for MCQ purposes. For MCQ, I think that what I have discussed, that is more than relevant. And what I did is I created a chart. So that just refer the chart of one page and you can easily revise whole section 12. Just refer the chart of one page and you will revise whole section 13. Just refer the chart of one page and you will revise whole section 14. So what I did is, I just make it easy for all of you guys, so that when you will revise the time of supply, you just have to read 3 pages. And after that, you have to solve some MCQs that is given in our MCQ booklet from 104 to 122. So that is again in your homework. You have to revise MCQs from question number 104 to 122. This is about time of supply. Now we are talking about value of supply. TOS, WOS and POS. Okay, so but yeah, in the two cases it is DOI or DOP, whichever is later. Normally it is, wait. So okay, this is like the principle for us to decide that weight is here. According to the provision, says in the first case DOI or DOP earlier, and in the fourth case DOI DOP later. I am just making it easy, because if like I will be explaining you DOI or DOP earlier, there is no logic. The logic is in the weight only. So as per the logic, you just look at the weight. But if you want to learn the section says that it should be DOI or DOP, whichever is earlier. In some cases it is DOI or DOP, whichever is later. But the logic is weight. So I just told you that what is the logic for deciding the rate of GST, that what rate I have to apply. Okay. Yeah, if it is MCQ about what date, then you can directly apply the provision, na, that where is the majority. You don't have to write down the provision. You don't have to write down the provision. So if it is a, yeah, if it is a theoretical question and they are directly asking you write down the provision, that what is the provision applicable, then yeah, I also write down the provision. That's why I write down this provision as well. So that when you will revise, by applying this principle, you can easily understand that why we are using earlier or later. Okay? Great. Now we are going towards valuation. Okay. Listen, everything that you all are also professionals and you all are so mature. Everybody knows that it is not quietly possible to cover everything in just 7 hours. Yeah, I have a lot of topics to cover. I have to cover supply, I have to cover time of supply, I have to cover valuation, I have to cover place of supply, ITC. It is not possible that I will be sharing each and every detail and discussing each and every detail in the class, because it will take more than 20 hours to cover all this. So if I am covering this in 7 hours, of course some things I will write down, but I will just not discuss that in class. But yeah, when you will be revising, you will get that yeah, this is there. Yes, it cannot be discussed in the class because we have some limitation, we have some time limitation. Okay, thank you. So now we are talking about the value of supply, valuation of supply. But yeah, I write down everything in the notes. So even something is not discussed in the class, it will be in your notes. So it will be easy for all of you to revise that. Now, we are talking about the valuation of supply, that what value I have to pay GST. So it is actually covered in section 15. And there are some rules as well to cover valuation. But the very important principle that we have to follow, again, I have prepared a chart to understand this whole section 15. Section 15 says that what is the value at which I have to pay GST? It should be the transaction value. Transaction value means what price the customer is paying to me. Price actually paid or payable by the customer. The price that the customer is paying should be my value at which I have to pay the GST. But there are some inclusions in that, and the inclusions are very important. If they are asking you an MCQ based question, they might ask you the inclusions, that what are the inclusions in the value of, what are the inclusions in the valuation. And listen very carefully, there are 5 inclusions. First of all, while I am calculating the value for the purpose of computation of GST, I will add all the taxes other than GST and TCS. Yeah, other than GST and other than TCS, I will add all the taxes for calculating my value for the purpose of GST. Look at the example. Like a multiplex ticket, I have told you that on multiplexes there is entertainment tax as well as GST. So for example, the base price of the ticket is 100 and entertainment tax is 10 rupees. Then tell me, GST will be calculated on 100 or 110? 110, yeah. So all the taxes other than GST will be included while calculating the GST amount. So in my turnover, when I am calculating the turnover, I will include all the taxes other than GST. But yeah, one more thing will be excluded, that is TCS collected under Income Tax Act. Under IT Act, on some sale of goods, I have to collect TCS as well. So that TCS amount will not be included in my value, because that is not my revenue that I have to pay to the government. So that is not my revenue. That is not my turnover. So how they can include TCS in my turnover? That is basically I am collecting the tax on the behalf of the customer. So that is not my revenue. So I will not include that, and I will not include GST. But all the taxes other than GST will be included while I am calculating the valuation under GST. Second, I have already told you about that in time of supply as well, that if I am charging interest on late payment, then that will also be included in my turnover. I will pay GST not only on the invoice price. If I am also charging the interest for late payment, that will also be included in my turnover. Third, I will be including subsidy other than government subsidies. So I am getting any subsidy from any NGO, I am getting any subsidy from any private manufacturer, or I am getting any subsidy from any other person, that subsidy will be included in my turnover. Only government, central government, state government subsidy will be excluded. Sir, what is the subsidy given by the union territory like Andaman and Nicobar? It is covered in central government only. Na? Union territory is governed by central government. So it will be covered in central government only. So subsidy will be included, but only private subsidies. Subsidy received from the government will not be included while I am calculating the value of the supply. So it will be excluded. All the other subsidy will be included. Another exclusion will be if I am instructing my customer not to pay the money to me, pay someone else. Means he came to me with the cash that yeah, he is ready to give me the cash. I told him, don't give me the cash, give this amount to my agent, give this amount to my creditor. So on my guidance, he is paying to the third person. How does it matter? Ultimately, it is receiving to me now. This is my consideration. On my instruction, he is paying to another person. So of course, this is my consideration only. So if any amount is paid by the buyer on my instruction to the third party, then that amount will also be included. And any other charges in whatsoever name, if I am charging the packing charges, marketing charges, I am charging research and development charges, advertisement charges, any charges I am charging, that all will be included in my value. So in my price, what should be included? In my price, all the taxes other than GST and TCS should be included. Interest on penalty on late payment, if I recover, it should be included. All the subsidy I have to add other than government subsidy. Any amount that the person is not paying to me, to the third person, but on my instruction, that should be included. And all the other charges that I am recovering, that should be included in my value. And the total turnover, on that total turnover, I will calculate the GST. Sir, please repeat point number 1, simple. On multiplexes, price is rupees 100. Entertainment tax is rupees 10. So GST will be calculated on 110, not on 100. So all the other taxes will be included while I am calculating the value for the purpose of GST. Getting it? So there are how many inclusions in the value of GST? 5. Tax other than GST and TCS, interest or penalty, subsidy other than government, any third party payments that is actually payable to me, but on my instruction it will be it was actually paid to the third person, and any other charges I am recovering, that all will be included in my invoice, and that value I have to add, calculate GST. Sir, what are the subsidies other than central government, state government? Any NGO is giving subsidy. Any NGO is saying that if you are particularly selling these commodities at these rates, we will give you the subsidy for that amount. That will be included. Any private manufacturer is giving any subsidy, that will be included. Only government subsidy is not included. All other subsidies should be part of my turnover. Union territory is also covered in CG and SG. because in union territory central government rule is applicable, so CG and SG, CG will be applicable there. Okay, central government subsidy is there. Okay, so now what is important? Listen carefully. There are two exclusions in the value. First, I will not add refundable deposits. So if the customer is also paying me something which I have to refund later, I will not add that in my turnover, and that will not be included in my value for the purpose of GST. So on that amount I will not be paying any GST, refundable deposits. Second important is very important, discount. If I have quoted the price of rupees 100 and the person is paying 90 only, GST will be applicable only on 90. But that discount should be known on the date of agreement. Discount given later which was not agreed on the date of sale will not be excluded. Means I have sold the goods for rupees 100, the person is required to pay me 100 rupees, now he is saying that I will be paying only 70 and he is asking me for discount of 30 rupees. I told him that I have not agreed for any discount on the date of sale. He said keep it, otherwise I will not be paying anything. So it's not a discount, it's basically a bad debt. If someone was not agreed on the date of sale about the discount and he is asking later to give a discount, then that is not excluded because that is a secondary discount. It's a ad hoc discount. It is a discount which was not agreed on the date of supply, and that's why that discount will not be excluded. Trade discount will be excluded, turnover discount will be excluded, cash discount will be excluded if all these discounts were agreed on the date of supply. That discount was known on the date of supply. But if there is any discount which was not known on the date of supply, that discount will not be excluded from my turnover. Means even if I am giving the discount, I have to pay GST on the full amount, because that is a secondary discount, that is a ad hoc discount. That discount is not deductible, that is discount will not be excluded while we are calculating value for the purpose of GST. This is the inclusions and exclusions for the value. Now there is one more interesting thing. We are considering price for the purpose of calculation of GST. What we are saying that I will be charging GST on the price, yeah? But the price should be arm's length, price should be genuine, and therefore there are two conditions to accept the price. First, the transaction should be between the unrelated person and the price is the only consideration. Yeah. If the transaction is between the relatives, it is not possible that I am applying GST on the price, because my price will be affected. My price will not be genuine. If the price is not only the consideration, I am also getting the consideration in other form, then my price is not genuine. So I will accept the price only when, I will accept this valuation only when I am fulfilling these two conditions. The person should be unrelated and the price is the sole consideration. If any of the condition is not fulfilled, then what I have to do? I have to go for valuation rules. If these two conditions are not fulfilled, I cannot use transaction value based valuation. I cannot apply transaction value as my value. I cannot use price as my value. Then what I have to do is I have to go for valuation rules. And basically what valuation rules says, valuation rules actually give weightage on open market value of the commodity or fair market value based valuation. So if you are not able to calculate the right price, because the price is not the only consideration, you are getting consideration in any other manner as well. If the transaction is between the related party, then what I have to do is I have to go for an open market value based valuation. I will be choosing open market value. I will be going for fair market value. And interesting thing is, if open market value or fair market value is not all available, then I will be going for cost of production based market value. There I will be adding 110% of cost of production as my value. Yeah. So if my price is not genuine, I am not able to find out the open market value of the goods, then I have to go for cost of production based valuation, and there I will be choosing 110% as my value for the purpose of GST. And even if it is not possible to find out the cost of production, then best judgment will be done by the officer. So valuation rule says that if you are having non-monetary consideration, if the supply is to the relatives and the agents, then we have to choose open market value based valuation. means what is the genuine market value of that commodity. That will be the value for the purpose of GST, not the actual price. Market value, we have to look at the market value rather than choosing actual price, if the price is not the sole consideration, if the buyer and seller are the related person. We will go for open market value based valuation. Sir, what if the open market based valuation is not available? Then I have to go for cost of production based valuation. There I will be choosing 110% of cost of production as my value. 110% of the cost of production as my value. And even if that is not available, I will be going for the residual method, that is the best judgment. Yeah. So this is how we will follow the valuation rules. So what exactly valuation says? Valuation says that while we are calculating the value, we have to choose the price. And in that price, we have to include 5 different inclusions: taxes other than GST and TCS, interest on late payment, subsidy other than government, amount which is paid to the third person on my instruction, or any other charges. But for this valuation, I have to fulfill 2 conditions. The person should be unrelated and the price should be the sole consideration. And there are 2 exclusions as well: refundable deposits and the discounts. However, if I am not able to fulfill these 2 conditions, then I have to go to the valuation rules. And what valuation rule says, that I have to go for an open market value based valuation as per rule 27, 28 and 29. If that is not available, then I have to go for 110% of the cost of production. And even if that is not available, then I have to go for the best judgment. Now, how to calculate the open market value or fair market value? Very simple. The definition of open market value says that at the time of your sale, what is the market value of the like or identical goods in the market? Like the similar goods, at what price they are sold to an unrelated buyer. So what is the market value at which these goods or the identical goods are sold in the market to the unrelated person? That market value will be used for my valuation. Okay, that is how we will calculate the open market value. Okay, so this is about the valuation rules. And the main, I think the MCQ question they can ask you in the exam is maybe related to these inclusions. They will give the practical situation, they will give the price, they will give you the taxes, TCS, interest, subsidy and all the amounts. And what you have to do, you have to calculate the total value. They will also give you the trade discount. If the trade discount is there, cash discount is there, you can deduct the trade discount and cash discount. Only secondary discount should not be deducted, because secondary discount is a discount which was given later and it was not agreed on the date of supply. So any discount which was not agreed on the date of supply should not be excluded. Remember this. So primary discount, trade discount, cash discount, turnover discount, these all will be excluded from the value, but the discount which is not known at the time of sale should not be included, should not be excluded. It will not be excluded from the value of supply. So this is all about the valuation. Sir, where we will find the questions of valuation? In your MCQ notebook, question 18, 19, 20, 21, 22, 32 and from again 123 to 128. These are the questions, MCQ questions of valuation in your notebook. And sir, any order to be followed while doing the valuation rule? Oh, there are 3 different rules. For non-monetary consideration it is 27, for relative it is 28, and for agents it is 29. But yeah, if these rules are not applied, then we have to go for rule 30, and if rule 30 is not applied, then we have to go for rule 31. So step is very simple: 27, 28, 29. If we are not able to find out the open market value, fair market value of the commodity, then go for cost of production based valuation. If it is not available, then last resort is best judgment assessment. Clear? TCS under Income Tax Act, not GST provision. I am talking about the TCS under Income Tax Act. So TCS under GST is covered under GST, na? So that is GST only. But I am talking about TCS under income tax as well. So TCS under income tax will not be included in the turnover. So these are the topic regarding valuation. And finally, all the questions are MCQ questions from question 18 to 128. You have to solve it your home. One more thing is, before you are leaving for the next session, you can write down my number, my phone number. This is my phone number. if you have any query regarding this session, and if you want any other material, if you want more material, like sir, I want an in-depth study and I want to get more questions material, you can just WhatsApp me on this number. Stay connected on this number. Even I am also on Instagram. On Instagram, the name is Nikhil Gokhru. You can also go for my YouTube channel, that is also on the same number, Nikhil Gokhru. There you will find out a lot of GST revision, as well as you will also find out the GST amendments, and you will get the regular updates of GST from this channel. On Instagram, I also share a lot of reels regarding knowledgeable finance ideas. So if you are following the Instagram, you will get a lot of finance ideas as well. And if you want to ask any doubt, anything regarding indirect taxes, you have any query, you can WhatsApp me on this number as well. So now we are having our next session from 5 to 7. So we are left only with 25 minutes. So have a tea break for 25 minutes. In our next session, we will be covering ITC and place of supply. These are the two important topics we have to cover today: input tax credit and place of supply. So we are meeting in like 25 minutes. Thank you, and we will meeting in the next session. I hope you enjoyed this session. We will be having our next session within 25 minutes. Thank you. Refund, I will try to cover. What I can do is, tomorrow when we are having custom lecture, I will go for refund for 30 minutes. Like for half an hour, I will try to cover the refund topic tomorrow, because it is not practically possible to cover all these topics today only. So I have... Definitely. What I will do is, audit is of like 5 minutes. GST audit 5 to 10 minutes. Anti-profiting agree clause 5 to 10 minutes. That I will cover today only. So tomorrow we will be covering refunds, and then we will start with customs. Okay? Okay. Thank you. Okay.